Good afternoon, ladies and gentlemen. My name is Russell Higgins and I'm the Chairman of Argo Global Listed Infrastructure Limited, or Argo Infrastructure, or ALI for short. On behalf of the Board of Directors, I'm pleased to welcome you to the 9th Annual General Meeting of the company and to report on its operations and financial results for the year ended 30 June 2024. It's pleasing to be able to meet here in person in Adelaide, and I see quite a number of shareholders here and a few visitors, so welcome to you all. Before we begin the formalities, I'd like to inform you that the meeting is being filmed and streamed live on the company's website for the shareholders who are unable to attend. A recording of the meeting will also be available via our website later in the day. And can I please request that you turn your mobile phones to silent? Thank you. I've been informed by the Company Secretary that the meeting has been convened in accordance with the Corporations Act and the Company Constitution. A quorum is present, and therefore I declare the meeting open. There is a disclaimer on the screen before you, and it's important to understand that the information being presented today is general information only and is not a securities recommendation or statement of opinion intended to influence any person in making investment decisions. You should seek professional independent advice when you're making any major investment decision. I'm pleased to ask my fellow non-executive directors, our Managing Director and Company Secretary, to introduce themselves to the meeting.
Thank you, Chair. Good afternoon, shareholders and guests. My name is Sarah Brennan. I was appointed to the board on the 1st of July 2024 as an independent non-executive director, and I'm also a member of the Audit and Risk Committee. Thank you.
Good afternoon. My name is Mark Hall. I've been an independent non-executive director of the board and chair of the Audit and Risk Committee since November 2019.
Good afternoon. My name is Fiona Hill. I was appointed to the board in 2022 as an independent non-executive director, and I'm a member of the Audit and Risk Committee.
Good afternoon, everyone. My name's Jason Beto. I'm the Managing Director of Argo Infrastructure. I've been with the company since IPO. I'm also the Managing Director of Argo Investments. So welcome.
And I'm Tim Binks. I'm the Company Secretary of Argo Infrastructure, starting at IPO with Jason. I'm also Chief Operating Officer of Argo Investments.
Thanks very much, team. I'd also like to introduce to you Ben Morton, who's the Senior Portfolio Manager from Cohen & Steers in New York, which manages Argo's infrastructure's portfolio. Cohen & Steers manages over $100 billion of investments for a range of clients around the world, and were pioneers in the development of the global listed infrastructure asset class. Given the time difference to New York, Ben has recorded some commentary regarding the global infrastructure sector and our portfolio, which we will hear later in the meeting. I'll now move on to the meeting procedures. All resolutions at this AGM will be decided by a poll. As chairman, I have called that poll. When registering your attendance, you will have received either a blue, orange, or white admission card. Shareholders or proxy holders representing shareholders were issued with blue admission cards and are entitled to vote on the poll and also to ask questions at the meeting. On the reverse side of your blue admission card is your voting paper and instructions. Only those shareholders with blue cards have received voting paper. This can be marked at a time we consider each resolution or at any other stage in the meeting. After the meeting, you can place your completed cards in one of the ballot boxes at the rear. The results of the poll will be released by announcement to the ASX later in the day. Holders of orange cards are non-voting shareholders, such as a joint shareholder when the other joint shareholder holds the blue voting card. These card holders do not vote by poll, but are entitled to ask questions in the meeting. All visitors were issued with white cards and are not entitled to vote or to ask questions at the meeting, but you are very welcome here today. The minutes of the 2023 AGM were confirmed as a correct record at the subsequent meeting of directors. The notice of meeting for this year's AGM has been circulated to shareholders, and I propose to take it as read. We now move to the first item of business. The audited financial statements of the company and the reports of directors and the auditor for the year ended 30 June 2024 have been published and made available to shareholders. In the course of receiving and considering the financial reports, I will now make some general comments about the year under review. This will be followed by a brief address from our Managing Director, Jason Beddow, and the Portfolio Manager's commentary from Ben Morton at Cohen & Steers. During the 2024 financial year, global infrastructure stocks generated a positive return, although they were significantly lagging broader equity markets as investors favoured growth-style stocks. The higher for longer interest rate environment across many of the world's major economies also weighed on the asset class, particularly electric utilities, which comprise nearly half the benchmark index. Against this challenging backdrop, Argo Infrastructure delivered a profit of $12.8 million, but more importantly, our global portfolio of listed infrastructure companies generated income of $14.9 million, up 3.8% from the previous year. In an environment of persistently high inflation, we believe the increased income we receive from our investment portfolio demonstrates the benefit of inflation-linked pricing mechanisms, which allow many infrastructure businesses to increase their user fees in line with inflation. In August, the board was pleased to declare a record high fully franked dividend of 5 cents per share. Together with the interim dividend of 4 cents per share, annual fully franked dividends increased to 9 cents per share, another record high for the company. Since Argo Infrastructure's inception, dividends paid to our shareholders now total 57.75 cents per share. Importantly, our most recent dividend marks the company's 13th consecutive fully franked dividend. Our established track record of delivering franked dividends underscores a key benefit of Argo Infrastructure's listed investment company structure. When the company pays tax on profits and realised gains in Australia, we generate imputation credits for our shareholders. Investing in overseas assets directly or via a trust structure does not provide this advantage. Following a challenging period, the new financial year has seen something of a reversal in the fortunes for global infrastructure stocks. In the first 3 months of this financial year, the benchmark index gained 9.4% amid growing expectations that the world's largest economy, the United States, would enter a new monetary policy easing cycle. As we know, in mid-September, the US Federal Reserve cut the official rate by a larger than expected 50 basis points. Argo Infrastructure has also performed well since the start of the new financial year, with the portfolio increasing by 10.9% in the September quarter. Over the same period, our share price rose by 18.8%, narrowing our share price discount to net tangible asset significantly. For the 12 months to 30 September, Argo Infrastructure's portfolio has gained 24%, outperforming the benchmark index by 4.2%. In fact, our portfolio has outperformed the benchmark index over all time periods to 30 September 2024. In our view, Argo Infrastructure's current share price discount to NTA is partly a function of the recent underperformance of infrastructure stocks relative to broader equities, following sharp increases in interest rates, which remain high. However, as central banks worldwide begin to continue cutting official interest rates, it's reasonable to expect that returns from global infrastructure stocks will revert to long-term averages. At the same time, listed investment companies across the ASX are trading at larger than average share price discounts to NTA. One of the main factors driving this trend is the increased relative appeal of cash investments due to higher interest rates now available on term deposits and other cash investments. We believe that Argo Infrastructure's current share price discount to NTA is largely cyclical due to these two factors. Nevertheless, we remain focused on ensuring the company's share price better reflects the value of its underlying investments by continuing to implement a range of initiatives. These include buying the shares required for allocation to participants in the dividend reinvestment plan and the dividend share substitution share plan, buying them on market rather than issuing new stock. Additionally, Argo Infrastructure has an on-market buyback facility in place to be used when deemed appropriate. Pleasingly, two external research houses have again recognised Argo Infrastructure's track record. Following an extensive research and review process, independent investment ratings firm Lonsec recently published its 2024 report on the company and reaffirmed its recommended rating for the fourth year in a row. Independent Investment Research, or IIR, has also maintained its recommended rating for the company. Both reports can be read in full on our website in the News and Insights section. I now want to talk a little bit about the governance of the company. As part of the board's succession plan, non-executive director Mr. Joycelyn Morton retired from Argo Infrastructure's board on 30 June 2024 after more than 9 years of service. Joycelyn was one of our inaugural directors and played a key role in Argo Infrastructure's initial public offering and successful ASX listing in 2015. Her strong financial expertise and team-first approach were of great value to the company. On behalf of the board, I'd like to take this opportunity to formally thank Joycelyn, who's here today, for her tireless work and contributions to Argo Infrastructure. Thanks, Joycelyn. Ms. Sarah Brennan was appointed an independent non-executive director with effect from 1 July 2024, and I'm pleased to introduce her to shareholders today. She's an experienced executive and non-executive director with more than 30 years of experience in financial services, including in financial planning, superannuation and banking. Sarah is standing for election today, and you'll hear more from her later in the meeting. Earlier this year, we announced that our Chief Financial Officer, Andrew Hill, would be retiring. At the end of August, we farewelled Andrew. I'd like to take this opportunity to thank him for his dedicated service to Argo Infrastructure since its inception. In that time, Andrew's diligence and expertise greatly benefited the company and our shareholders. On behalf of Argo Infrastructure, I wish Andrew all the very best in his retirement. Stephen Mortimer was subsequently appointed CFO to both Argo Infrastructure and Argo Investments, having been promoted from the position of Finance Officer. Stephen joined Argo in 2012 and over the last 9 years has worked closely with the Chief Financial Officer on all aspects of Argo Infrastructure's finances and financial reporting. He is a certified practicing accountant and a graduate of the Institute of Company Directors. I'm pleased to formally introduce Stephen to our shareholders today. I now turn to the outlook. As the world's major central banks transition to monetary policy easing, global infrastructure stocks can expect significant tailwinds. The asset class is also poised to benefit from a number of other themes shaping the global economy, such as the anticipated surge in low emissions energy demand, which will be a boon for electric and gas assets. Shortly, Ben Morton, our portfolio manager at Cohen & Steers, will discuss these and other trends and opportunities for listed infrastructure companies in a pre-recorded video from New York. As we approach the 10th anniversary of Argo Infrastructure's listing on the ASX, we remain focused on delivering returns for our shareholders consisting of capital growth and dividend income from our global portfolio of listed infrastructure companies. While market participants' sentiment towards the asset class has waxed and waned over time, we are pleased that our portfolio has delivered an average return of 8.7% per annum since inception, with less volatility than the broader equity markets. Argo's infrastructure remains in a solid financial position with approximately $450 million of assets and no debt. I'd like to conclude by thanking our Managing Director, Jason Beddoe, and his team for their continued excellent performance and hard work in running the company. I would also like to thank Ben Morton and the team at Cohen & Steers who've done a sterling job as portfolio managers. I'd also like to thank my fellow board members for their insightful and valuable contributions to the company over the past year. More importantly, I thank you, our loyal shareholders, and to our new shareholders, welcome to Argo Infrastructure. That concludes my address, and I now call on Jason Beddoe to give his Managing Director's address. Thank you.
Afternoon, everyone. If I think back at last year's annual general meeting, we focused a lot on the impact of higher interest rates on global listed infrastructure in particular, following that rapid monetary policy tightening of the preceding 12 to 18 months. And the chairman has addressed that, but I think I'm going to reiterate some of that. We think it's a very key time for infrastructure, and it's a very key point on how these stocks have behaved. Utilities in particular are sensitive to rate rises because they do carry considerable levels of debt due to their reliable income streams. Electricity, gas, water, and a lot of these also do have renewables, but these account for about half of the infrastructure benchmark. And their underperformance over that period has really dragged on the overall performance of the asset class. So now we're at a different time. So the monetary policy cycle has continued to mature in the period following last year's AGM. And over the last year, when we've speculated when the US Federal Reserve would begin lowering interest rates, that has begun. So in September, the central bank cut rates by larger than expected 50 basis points. So we've entered a new phase, and I guess the expectations are that the Fed will continue to cut through 2025. Now, this policy easing by the world's largest economy is a significant tailwind, we believe, for global listed infrastructure, particularly as more than half of the infrastructure index does consist of US stocks. In addition, though, most other major developed and emerging economies have also begun cutting interest rates, or they're expected to in the near term. So as the chairman noted, in recent months, the asset class has responded positively. It's posted solid gains and it's outperformed broader global equity markets, and we hope that continues. We are coming up to, I guess, an anniversary or 10-year anniversary. And when we established Argo Infrastructure, approximately a decade ago, we did recognise, that the global infrastructure space was, complex and quite diverse across asset class and geography. And it required a specialist portfolio manager with a truly global presence. And so after careful consideration, we decided on Cohen & Steers. And just as a reminder, Cohen & Steers was founded in 1986. It's listed on the New York Stock Exchange and it does have people, and operations in offices worldwide. So I guess we call it on the ground close to infrastructure assets. And we believe, this does provide them with a distinct competitive advantage. Their local presence does provide valuable insights and connections with industry participants and, more importantly, relationships and local knowledge with regulators. Infrastructure is a sector that's prone to regulatory change. So this, together with Cohen & Steers' process and expertise, has continued to generate outperformance relative to the benchmark across all time periods of ALI's history. For those of you that may have come to the roadshow that Argo and ALI held in May, Tyler Rosenlicht from Cohen & Steers joined us, one of their senior portfolio managers. He was here to share his insights into the asset class and its outlook, and we look forward to having another member of the Cohen & Steers team present when we visit various capital cities next May as well. As the chairman mentioned, the lead portfolio manager, Ben Morton, he'll share Cohen & Steers' latest views on global listed infrastructure in a video we'll just play shortly. And just before we play that, though, I'd also like to acknowledge the team, the Argo team, who are the manager of Argo Infrastructure. You've met Steve, who I'm looking forward to working with, and a lot of other members of staff are here as well. Also like to thank the chairman and the non-executive directors for their roles. Welcome Sarah to the board. Farewell Joycelyn from the board, and look forward to working with the board over the coming year. And I wish all of you well, our shareholders, as we run into the end of the year. It's a busy time. Can't believe how quickly the year's gone. We thank you for your continued support and we look forward to seeing you next year. So we'll now cut to the video. Thank you.
So we're asked a lot, why infrastructure now? So I'm going to give you the high-level case for infrastructure in the context of today's market and macro environment. So first, when you think about the several macro factors that influence infrastructure performance, we'd argue that they all point to a positive outlook for infrastructure today. So first, when you think about growth globally, a lot of question marks about growth, but certainly we believe that growth is slowing. Not necessarily forecasting a recession, but growth slowing, which is generally positive for asset classes that tend to be more defensive, like listed infrastructure. I think the second point really relates to central bank policy. And clearly in many developed markets around the world, notably the US, Europe, for example, we're seeing central bankers starting on their easing cycles, which again, for a capital intensive asset class like infrastructure tends to be a positive thing. And then lastly, inflation. As we know, many infrastructure businesses have pricing mechanisms that are linked to inflation. And while we have seen inflation come down tremendously from the peak seen a couple of years ago, we think inflation has the potential to be quite sticky relative to expectations. So, when we think about the fact that we are in an era of scarcity when it relates to commodities relative to an era of abundance that we saw in prior cycles, when you had, I'd say, less environmental restrictions, fewer zoning restrictions, and frankly, a much lower cost of capital for commodity producers. It's a different world today. So we think between tightening commodity markets from a supply-demand perspective, as well as sort of just-in-time inventory approaches by retailers, which is going to mean more price action when demand increases, we think that inflation should remain higher than trend and likely to surprise to the upside. So when you think about infrastructure, again, it tends to outperform broader equities in periods of slowing economic growth or weaker growth than the market expects, falling interest rates, which is what we expect to see, at least from a central bank policy perspective, and higher than trend or higher than expected, I should say, inflation. So one, fundamental case for infrastructure relates to that macro outlook. The second point relates to valuations. So infrastructure historically has traded at a 10% premium to broader equities on a cash flow multiple basis. That's EV to EBITDA, enterprise value to, basically to cash flows. 10% premium, excuse me. Right now, infrastructure is trading at about a 10% discount to broader equities. We think that is exceptionally cheap in the context, again, of that macro environment that we believe that we are in and certainly moving towards at the end of this year and into next year. So we think the asset class is cheap in the context of that environment. And then lastly, some real interesting fundamental tailwinds. So there's themes that we've talked about for some time, like digital transformation of economies and the Internet of Things, and what that means for demand for data, which benefits certainly cell tower companies in our universe, as well as data centers. Another theme that we've talked about a bit is evolving supply chains, geopolitical tensions, worker strikes that are causing really a rewriting of supply routes around the world, changing logistics supply chains, which are benefiting a number of companies in the freight transportation space, like freight railways and marine ports. Of course, some of these plays can be a little bit more idiosyncratic. The last theme that we'll speak about, that's I'd say is a tailwind to the space today, relates to power demand. And we're coming off of a period of, take the US, for example, flat power demand for a decade, really longer than a decade. And for a number of reasons, we're seeing rising power demand growth, which is set to benefit, in our space specifically, utilities, nuclear power companies, as well as midstream energy companies, those that focus on natural gas pipelines, processing, and storage. A theme that we're really excited about today, and I mentioned it in the first point, relates to the increasing power demand that we're seeing in many markets around the world. Again, due to efficiency gains that we've seen on appliances and the like over the years, we've effectively seen flat power demand and actually decreasing power demand in several developed markets around the world over the last decade. Now, what's changed that's driving this much more positive outlook for power demand? And it's really three things. First, electrification trends, whether it's electrification of appliances, Internet of Things, much more power intensive appliances, but also electric vehicles, which are clearly driving increased power demand around the world. Second, it's precision manufacturing. So manufacturing around the world that is much more power intensive, given how precise the manufacturing is and the equipment that's used in the manufacturing process. Lastly, it's data center growth. And this is clearly the theme of the year as we look at all of the cloud providers and their demands for data over time and what that means in terms of both data center growth and then the power that's needed to fuel effectively those data centers. So again, just by context, if you look at the United States, for example, historically over the last 10 to 15 years, we've had zero electricity demand growth. We were already forecasting about 1 to 1.5% demand growth just due to electrification trends and also due to certainly other dynamics within that market. But now we are seeing, the fast rise in demand from data centers, which is taking our forecast to 2 to 2.5% a year through 2030. So pretty significant increase in data demand, which is going to have big implications for a number of companies within our universe. So specifically within our universe, it's electric utilities, it's companies that have access and exposure to nuclear generation. And then it's midstream energy companies. And specifically within midstream, it's those companies focused on transporting, storing, and processing natural gas, which is a fuel that we think is going to be a very important part of energy transition, but also an important part of the satisfying of all of this demand for power, not only in the US, but all over the globe. So again, the theme is data center demand. There are a lot of nuances to this theme, meaning, yes, we think companies can benefit within our universe. So utilities, for example, utilities make more money when they're able to invest more because they earn an attractive rate of return on that investment. But one has to also be wary of price shock, meaning the more you invest, the higher price you have to charge your customers to recoup that investment in terms of allowed returns. And ultimately, companies have to manage the rate implications of all of this new investment. So for us, it's about finding the companies that are in attractive jurisdictions, that have rate mechanisms that allow them to invest and grow their earnings per share. It's with companies who are owners of nuclear power plants, which are very cheap and reliable electricity that in some cases can sell directly to some of these data center owners and operators at very attractive power prices over the long term. So there are a number of different ways in which we can play this. And lastly, I guess, midstream energy, again, there are companies who are the leading players in, again, midstream energy, owning and operating pipelines in North America that will fuel the gas-fired power plants that are helping to satisfy this demand growth. So, billions and billions, tens of billions of dollars of investment that are needed, not only in power plants to satisfy this demand growth, but also the transmission wires to connect new data centers to these power plants. Clearly, a big topic of discussion right now is the election in the United States and implications not only for the broader market, but also for infrastructure. So, it's going to be a tight election. It seems very clear between Trump and Harris. I think the reality is it's going to be very tight, and we're likely to have a divided Congress, meaning implications are going to be minimal in terms of massive policy shifts. But on the margin, I think there are two places within infrastructure we have to keep a close eye on. So first, it's energy policy. And clearly, our current administration has been very favorable as it relates to renewable energy and the development of renewable energy. And it's a lot of tax credits for renewable energy development, ownership, and operation. I think the vast majority of those tax credits will stand, solar and wind being the most important within our universe. And this is a lot of this through the Inflation Reduction Act, the IRA. So I think most of that will stand. It'll be very difficult to repeal IRA in full. In fact, a lot of Republican states have been the biggest beneficiaries of IRA a policy, in fact, through renewable spending. So I don't think we're going to see big changes with a new administration, or at least with a Republican administration, to the extent that Trump wins. I think at the same time, there's an increasing acceptance of natural gas as a transition fuel, as I've mentioned already. So I don't think we'll see a big change as it relates to policy for natural gas specifically, which is important for our universe of companies. I think the second point is on taxes. So we have some diverging tax policies, clearly with Trump looking for lower corporate taxes and Harris looking for higher corporate taxes. Again, I think any major corporate tax change would be very difficult to pass with a divided Congress. With that said, we know which businesses within infrastructure are the largest cash tax payers. So, for example, freight railways have historically been the largest cash tax payers. So to the extent that we see a change in corporate tax policy one way or another, we could see the most significant impact on those businesses, certainly relative to other things within infrastructure. So takeaway is, we think the election is going to be fairly close. We think we're likely to see some sort of a divided government, which likely means little major sort of policy implications, or few major policy implications for listed infrastructure companies.
Well, thanks very much to Ben and also to Jason. I'd like to introduce to you Josh Hall, who's the signing audit partner from the company's external auditor, EY. He's present here today and able to answer any questions relevant to the conduct of the audit and the preparation and content of the auditor's report for the year ended 30 June 2024. Josh. Shortly, I'll address any shareholder questions on the financial reports and general matters, bearing in mind that separately we'll consider the remuneration report and other items of business at the AGM later in the meeting. And at that time, there'll be ample opportunity to ask questions in relation to those resolutions. To ask a question, please ensure you have your blue or orange card and make your way to the microphone. There's one there in the middle and one over on the other side. Please state your name and affiliation when invited to speak, and limit yourself to one question at a time in consideration of other shareholders. Are there any general questions or comments on the financial reports at this time? Yes.
Mr. Chairman, sorry, is that working?
Yes, it is.
Mr. Chairman, just a general comment. My name is Greg O'Connell and I represent 80 plus shareholdings and around 2.6 million shares as proxy through the Australian Shareholders Association. Just for advance notice, we'll be voting in support all of the motions that have been put up today, and I don't have an accompanying question. Thank you.
Thank you very much, Greg. If there are no other questions, I'll move to the next item on the agenda, which concerns the adoption of the remuneration report. The Corporations Act requires that all ASX-listed companies submit a remuneration report to their shareholders for consideration and adoption by way of a non-binding resolution. Argo Infrastructure's remuneration report is detailed within the annual report. The remuneration report is relatively short, outlining the remuneration of each non-executive director. As the company is externally managed, the managing director and other executives and key management personnel are not paid by Argo Infrastructure, but are remunerated by the manager, Argo Service Company Limited, as part of their roles with Argo. The non-executive directors of ALI receive a fixed base fee and do not receive any additional fees for participating in board committees and are not entitled to any other remuneration other than legislated superannuation entitlements. I now move that the motion for the remuneration report for the year ended 30 June 2024 be adopted. Can I ask that any shareholders that wish to ask a question regarding the remuneration report specifically make their way to the microphones? While you're thinking about that, for your information, the details of the proxy votes received on this resolution appear on the screen. Please note that this resolution is advisory only and does not bind the directors of the company. However, should 25% or more shareholders vote against the remuneration report for 2 years in a row, then shareholders at the second AGM will be asked to vote on whether all directors should stand for re-election. Are there any questions regarding the remuneration report? If not, I now put the resolution to the meeting. I remind you that we're voting by way of poll. If applicable, please mark your blue voting card for item number 2. Thanks very much. I'll now move to the next item of business, which is item 3 on the agenda concerning the re-election of Director Fiona Heal. Fiona retires by rotation in accordance with the company's constitution, and being eligible, offers herself for re-election today. The details of Fiona's qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Fiona's re-election, as they consider that she continues to be well qualified to act as an independent non-executive director of the company. I now invite Fiona to address the meeting.
Thank you, Chair. Good afternoon, ladies and gentlemen. It is my privilege today to stand before you to advocate for my re-election as a non-executive of Ally. I have thoroughly enjoyed being on the board of Argo Infrastructure for the last 2 years, and to have the opportunity to work with such a dedicated and highly skilled board and management team. As a chartered accountant and experienced non-executive director across multiple industries such as transport, tourism, education, defence, utilities, technology and infrastructure, I believe I have a diversity of experience which enables me to bring a well-rounded perspective to board discussions. As an experienced audit and risk chair, I have played a key role in strengthening corporate governance frameworks and risk management processes. I've also been an advocate for sustainability and corporate responsibility in many of my board roles, ensuring that ESG factors are integrated into business strategies. This aligns with a global trend towards responsible investment, particularly in infrastructure, where long-term sustainability is absolutely crucial. I'm currently chair of ASX 200 listed The Kelsian Group, and I'm a Commonwealth of Australia appointed non-executive director of CEA Technologies, a business in the defence industry. My board positions across a range of companies, both listed and private, have enhanced my expertise in governance and compliance, particularly in managing financial reporting and oversight in listed companies. In a rapidly changing global infrastructure landscape, boards require directors to have the foresight to navigate future challenges and seize new opportunities. I believe that my past and present executive and non-executive director roles have provided me with this ability. I thank you for your support, and if I am re-elected, I look forward to continuing to act in your best interests. Thank you.
Well, thank you very much, Fiona. I now move the motion that Fiona Adrian Heel be re-elected as a director of the company. Can I ask that any shareholder who wishes to ask a question regarding this resolution, please make your way to the microphone. While you're thinking about that, for your information, the details of the proxy and votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. I probably should have noted this before with previous resolutions, that in the notice of meeting we advised that any open proxies directed to the chairman that I would vote for the resolution, so shareholders know that when they give their proxy to the chairman, so that will happen. Simple majority greater than 50%, as I said. Any questions regarding Fiona's re-election? If not, I now put the resolution to the meeting. If applicable, please mark your blue voting card for item number 3. And I'll move on to item number 4 on our agenda, which concerns the election of Ms. Sarah Brennan. Sarah was appointed to the board on 1 July 2024 as an independent non-executive director. Following appropriate background checks, she is a member of the Audit and Risk Committee. Sarah is an experienced director with extensive experience in the financial services industry, and her skill set is ideally suited to the board. In accordance with the company's constitution and being eligible, Sarah offers herself for election by shareholders today. Details of her qualifications and experience are included in the notice of meeting. The other directors unanimously recommend that shareholders vote in favour of Sarah's election, as they consider that she is well qualified to be a director of the company. I'll now invite Sarah to address the meeting.
Thank you, Chair. Good afternoon, ladies and gentlemen. My name is Sarah Brennan, and I am very pleased to offer myself for election to the Board of Directors of Argo Global Infrastructure Limited. As you may have seen from my brief resume in the notice of meeting and in the annual report, I've had over 30 years' experience in the finance and investment industry. During this time, I've had 3 stages of experience in my working life, all of which I believe contribute to the experience and knowledge I bring to the ALI board. These are initially working for small and large domestic and international financial services companies, commencing as a customer service representative and moving through to be COO and Chief Executive Officer of large institutions. Following this, I moved into my more entrepreneurial activities, which involved conceiving, developing, managing and divesting financial services boutique operations in Australia. And then finally, as a non-executive director of industry bodies, superannuation funds, private companies and listed companies. I've been privileged that my career has covered a range of different elements in the finance industry, including retail and institutional funds management, financial market trading, life insurance, investment banking, superannuation, financial planning and wealth management, and corporate advisory. I have worked primarily in Australia, but I've also had responsibility and overseen operations in Asia, as well as working on the ground in Asia, Europe, and the USA. As a non-executive director, I joined my first board in 2001 and have been a member of boards ever since. I've had experience of being a director of companies large and small, listed and unlisted, parent companies and subsidiaries, and also profit and not-for-profit organisations. In addition, I've been a member of and chaired many board committees, including investments, audit, and risk. And most of my board experience has, one way or another, been related to the finance industry. While I'm currently on the board of a number of other companies, I have ensured that I have sufficient time to dedicate to my duties on the Argo Listed Infrastructure Board to properly, appropriately, and fully carry out my responsibilities. I do not believe I have any conflict of interest which would impair my ability to fulfil my role to the Argo Listed Infrastructure Board. Since joining the Argo Listed Infrastructure Board approximately 6 months ago, I've been impressed by the way the board and management approach the task of managing ALI to consistently deliver on the clearly articulated aims of conservative management, strong, reliable and growing dividends, capital growth, low cost, and strong communication with you, our shareholders, providing clear and transparent information. These fundamental pillars are consistently front of mind for all of the management team and board in consideration and discussions. I believe I have the skills and experience to make a valuable contribution to your board, and with your support, I look forward to continuing to work in your interests. Thank you so much.
Well, thank you very much, Sarah. I now move the motion that Sarah Jane Brennan be elected as a director of the company. Can I ask that any shareholders who wish to ask a question regarding this resolution, please make their way to the microphone. For your information, details of the proxy votes received on this resolution appear on the screen. A simple majority of greater than 50% in favour is required to pass this resolution. Are there any questions regarding Sarah's election? If not, I now put the resolution to the meeting that Sarah Jane Brennan be elected as a director of the company. I now move to the next item of business, which is concerning the renewal of proportional takeover provisions. This last item of business concerns the renewal of proportional takeover provisions contained in the company's constitution. The special resolution to be considered is, and I quote, that the proportional takeover provisions in clause 25 of the company's constitution be renewed for a period of 3 years, commencing on and from the day this resolution is passed. Clause 25 of the constitution of the company has the effect of providing that shareholders representing a majority of shares, for which votes are cast at an annual general meeting, must approve a proportional takeover offer for their shares in an order for any such offer to be effective. Clause 25 only applies to proportional takeovers and has no application where an offer is made for all the company's shares. If a proportional takeover offer is received, the directors are required to convene a meeting at least 15 days before the offer is closed to consider a resolution to approve the proportional takeover offer. The offerer and persons associated with the offerer are ineligible to vote. By virtue of the Corporations Act 2001, Clause 25 ceases to apply 3 years after it was last renewed, which was on 25 October 2021. A resolution is accordingly proposed that Clause 25 be renewed for a further period of 3 years from the date when the resolution is passed, so as to give the majority of shareholders the right to approve or disapprove a takeover offer for less than 100% of their shares. The potential advantages and disadvantages for directors and shareholders if Clause 25 is renewed are outlined in detail in the notice of meeting, and I do not propose to repeat that information here. The directors consider that it's in the interests of shareholders to have the right to vote on a proportional takeover offer, and accordingly recommend that the renewal of Clause 25 be approved at this meeting. I now move that the approval be given to renew the proportional takeover provisions of the company's constitution. Can I ask that any shareholder who wishes to ask a question regarding this resolution, please make their way to the microphone. For your information, the proxy votes received on this resolution appear on the screen. This is a special resolution, and as such, a majority of 75% in favour is required to pass this resolution. Are there any questions regarding the renewal of the proportional takeover provisions? If not, I now put the resolution to the meeting. If applicable, please mark your blue voting card for item number 5. That concludes the formal business of this meeting. Earlier today, at the Argo Investments Limited AGM, I announced I would be retiring from the board of directors of Argo Investments at the end of 2024. With 2 young grandchildren commanding my attention, one of whom lives in Paris and a third arriving soon, I've decided to retire from all my work commitments by the end of this year, in order that I can spend more time with my grandchildren. Consequently, I will be retiring from the board of directors of Argo Global Listed Infrastructure Limited at the end of this calendar year. It has been a pleasure for me to chair Argo Infrastructure for the past 6 years. When I commenced as chairman in July 2018, ALI was a very young company, just 3 years old. It had to deal with some difficult issues in the market and was still finding its own rhythm as a listed investment company investing in international shares on revenue account. Thanks to a combination of thoughtful, prudent management of the company and good performance by the portfolio manager, Argo Infrastructure has now an established track record of good performance. Over the past 6 years, the company has produced a growing, fully franked dividend and capital growth, delivering attractive total returns for its shareholders and providing an easy opportunity for diversification to Australian investors. During my time as chairman of ALI, I've overseen an evolution of the board of directors, and we now have 3 very skilled and experienced independent non-executive directors on the board. Peter Warne is chairman-elect of Argo Investments Limited and will join the board of ALI as chairman on 1 January 2025. Peter is a very experienced senior company director with extensive knowledge in financial services and the investment banking sectors. We're fortunate to have someone of his calibre to chair the company. I know I'm leaving the company in good hands, and I look forward to being a happy shareholder for many years to come. Perhaps I could invite Mark Hall, who's chair of our Audit and Risk Committee, just to address the meeting at this time. Thanks, Mark.
Thank you, Russell. On behalf of the board, we'd like to thank you for your dedicated 6 years of service as a board member and chair, as you've outlined. It has been some journey. We've been very fortunate to have someone of your calibre to play such a pivotal role in building the company to what it is today. Your professionalism, depth of experience and supportive approach to fellow board members, management and staff has been much appreciated. We can also like to congratulate you on an outstanding career. You should be very proud of it, and we wish you well in your retirement. It does sound like exciting times ahead for you. We look forward to working with Peter Warne, our incoming chairman, to build on the legacy you have played such an important role in creating. Thanks again, Russell.
Well, thanks very much, Mark, for those very kind words. I am indeed looking forward to the next chapter in my life. And hopefully I might even get a few more wins from my football team, who've not been doing all that well for the last little while. But anyway, there you go. Can't have everything. The poll will remain open for a short time after the meeting to allow you to submit your votes as you leave. Please don't forget to place your votes in the box as you leave there, and we will announce the results of the poll later today to the ASX. If anybody requires any assistance in filling out their voting card, please ask one of the representatives of Argo Infrastructure or a boardroom who will be happy to help you. I now declare this 9th annual general meeting closed, and I invite you to join us for refreshments outside. You get the chance to have a chat with staff and look forward to speaking with you there. Please don't forget to put your ballot papers in the ballot boxes as you leave, and thanks very much for your attendance today. Thank you.